I want to talk a lot more about the markets right now. We are joined by Charmaine Mosavar, Rashmani. I apologize. I always butcher it. Chief Investment Officer of Wealth Management at Goldman Sachs. Her outlook for 2025, I should say, is titled "Keep on Truckin'." So the risk-on situation is on. The question is, will we really keep on trucking?
So there are two messages from Keep on Trucking. Yeah. One is the U.S. truck ahead.
Yes.
So we've had this U.S. preeminence view now since the global financial crisis, when everybody was saying decline of the U.S., rise of China. We took a very strong stand against that. And so the Keep on Trucking image with the U.S. ahead of everybody else by far.
By far.
And the gap is actually widening. It's really incredible. Nobody is going to catch up. The idea that these other countries are going to catch up to the U.S. is just not going to happen. The math just doesn't work because the U.S. is starting from such a high base every year, whether it's GDP, whether it's GDP per capita, whether it's labor productivity. So that's one message from Keep on Trucking.
And what's the second message?
Invested.
Stay invested.
Stay
fully.
Invested fully. So we have had that recommendation also since the global financial crisis. Here's an amazing statistic. If you had $100 million invested in the S&P 500.
If you just happen to have $100 million invested, why don't you do it with like $100,000 or $10,000 for
it could be
folks at home?
The reason we like 100 is because everything isn't 100%.
Right,
so you could divide it by 10, multiply it by 10, any number.
Yep.
You'd have $1.2 billion. If you had invested in non-U.S. developed markets, you'd have less than half. Emerging markets, a third. China, not even a quarter. So stay invested, stay with the U.S. And I know it's exciting to try to chase the hot dot and move money around, especially for U.S. investors. Stay invested, don't try to trade it, and don't have to pay taxes.
Are you of the view, by the way, that over the next 2 decades that we'll see the same, I mean, this is now a long-term prediction, that we'll have the same kind of growth that we had post-2008?
In terms of...
Meaning if you look at, you were just giving performance since 2008, I assume.
Trough 2009, yes.
2009. Okay, yes. So let's say the last 15 years, call it, just to make it even numbers.
Yes.
Do you think over the next 15 years that somebody that's invested in the market would have the same kind of performance that they did in the last 15 years?
Excellent question, and definitely not. So annualized since that time, the returns are 17% a year.
Wow.
We're definitely not going to replicate those kind of numbers. Now, this is from the trough of March of 2009, but still, when you look at the annualized numbers, we're not.
So what do you think the numbers are going to look like? And I'll make it easier for you. What's it going to look like for the next year?
So that's very interesting.
Which may not actually be easier to figure out. It may be easier to say what it'll be in 5 years.
So we have a base case of 8%. And when I was here last time, I think Joe gave me a hard time about why do you have different probabilities. But we think investing
depends on which client you're talking to. You give the good information to the really wealthy client. 7 to 8% is just a long-term average. That's not tough to come up with, right?
You actually said the same thing last year, too. Yeah. It gave me a hard time. But actually, in an environment where the market is up 70% since the trough in 2022, people can say, well, how can you have another incremental return? And that is driven by a strong view on earnings. So last year, Q4, if we got around 11%, our base case is we're going to have earnings growth around 10%. You have your dividend, you have a bit of multiple contraction, you end up with a base case of 18, but a good case of mid-teens.
Okay, let me give you another example. A way we might have growth like that is if you have another drop-off like that. Let's say prices come down significantly. There's something that none of us are anticipating that really crashes the market in some way, shape, or form. That's how you get to be outsized growth if you start at the trough again.
Yes,
right?
Yes. But the question is, what is the likelihood? What's the probability of a bad case? There's so many geopolitical risks out there that some of them could easily create a downdraft. But it's very important that clients expect a bit of a downdraft. The probability of a 5% downdraft, which we've recently had, peak to trough, is 100% pretty much.
But how
can the probability of a 10% downdraft is 80%. So we always encourage clients to have a well-structured portfolio so they can withstand the downside.
What is the visibility for what earnings would be 5 years from now, 10 years from now? Doesn't it take into account, geopolitical events and turmoil and trade changes and AI? And I don't even... Can we make an assumption about what the compound growth rate for earnings would be for the next 10 years? I don't think you can even come close, can you?
We have an incredible graph in the report that shows the trend of earnings since World War II. So clearly there are events that happen like the pandemic, like the global financial crisis, European sovereign debt crisis, and you're going to get dips, but the growth in earnings in U.S. companies has been unbelievably steady in the long run.
What has it?
So
What's
around
the number?
6.5%.
6.5%. Could AI put it at 8%? Or?
Not that much, definitely
No?
not.
So long term, it's like 6 or 7%.
At best,
it's like the stock market.
At best, we think that AI could increase GDP by 0.3, 0.4%. Our colleagues in Global Investment Research, John Hotzius and his team, expect that. And the expectation is U.S. will benefit the most from AI relative to all other countries and sooner. But the idea that it's going to totally change U.S. labor productivity by that much to change
what
earnings
did the internet do?
Is not possible.
How much did the internet add? More or less in AI?
I would think when people talk about
Amazing.
AI versus the internet, you can't have AI without the internet. So the idea that AI is as strong as the internet
was transformative.
It took 20 years.
Yeah,
right?
but it was
took a very long time.
It was a quantum leap.
Yes, and everything. And nobody could imagine all the things that emanated.
And I can't believe AI could be even more powerful. Is that possible?
Not at all in our view.
Okay.